Good morning, students. Once again, I recall income and expenditure account. Income and expenditure account is a summary of not-for-profit organization. This is prepared at the end of the accounting period. These income and expenditures are prepared to find out the surplus or deficit pertaining to a particular year. So, income and expenditure account is a nominal account category. It records all expenses and losses, all incomes and gains. See, it records only revenue receipt and revenue expenditure alone. It records only revenue receipt and revenue expenditure. Revenue receipt, revenue expenditure is a recurring nature, a repeated one. Okay, these revenue receipt and revenue expenditure belongs to current year. Okay, current year revenue receipt, current year revenue expenditure alone to be recorded. For example, previous year revenue receipt or subsequent year revenue receipt or previous year revenue expenditure or subsequent year revenue expenditure are not recorded in the books. It records only current year revenue receipt and current year revenue expenditure alone. It is a revenue receipt and revenue expenditure. It helps to know the working of the organization and to know whether the income is sufficient to meet its expenses. It can be prepared from given receipts and payments account. See how to prepare the income and expenditure account. With the help of receipts and payments account, we are going to prepare income and expenditure account. What are the steps to be preparation of income and expenditure account from receipts and payments account? Generally, receipts and payments account started with the opening balance of cash in hand and opening balance of cash at bank. It ends with the closing balance of cash in hand and the closing balance of cash at bank. All capital receipt and revenue receipt, all capital expenditure and revenue expenditure. These revenue receipt or capital receipt, these revenue expenditure or capital expenditure belongs to previous year or current year or subsequent year. This is the nature of receipts and payments account. So out of these, whatever item take over from the receipts and payments, we are going to prepare the income and expenditure. Revenue receipt and revenue expenditure. Particularly, these receipt belongs to current year receipt. This expenditure belongs to current year expenditure alone to be recorded. See, just you are going to see the format. See the format of income and expenditure account. Income and expenditure account has two sides. One is debit side, another one credit side. As per nominal account rule, all expenditures are recorded in the debit side, all incomes are recorded in the credit side. See, whatever item appear in the expenditure side of the income and expenditure account, these are all recurring nature, repeated one. The same, whatever income received by the income and expenditure, these things also are recurring in nature. Non-recurring nature are not come under income and expenditure account. Non-recurring nature transfer from receipts and payments to balance sheet. See first one, to salaries, expenditure, charity, to rent, to donation paid, to stationery, to loss on sale of asset, to depreciation. Then income side, by subscription, by donation received, by admission fees received, by grant received, rent received, interest received, profit on sale of asset. Then we are going to put the total, which side is the highest. For example, credit side is the highest total. Credit side is the highest total. That means excess of income over expenditure. Now we get surplus. Are you clear? Suppose expenditure side is heavier than the income side. Expenditure side is the heavier. First we put the total on expenditure side. The same total also appear at the income side. The difference to be treated as a deficit. That is expenditure over income. Now the expenditure is greater than the income. The difference amount should be treated as a deficit. Then come to illustration number 6. I think, are you clear? Okay. So students requested just to go through the format, then you see the illustration. From the following receipts and payments account of Ooty Recreation Club, prepare income and expenditure account for the year ended 31st March 2018. See, receipts and payments are given. Out of these, capital receipt as well as revenue receipt, capital expenditure as well as revenue expenditure also appear. But in income and expenditure account, revenue receipt and revenue expenditure, particularly these receipt belongs to current year alone to be recorded. Capital receipt are completely ignored. Capital expenditure also completely ignored. So what are the revenue receipt and revenue expenditure? See, receipt side, rent received, recurring nature. It should be appear on the income side. Then subscription received, also revenue receipt, it should be appear on the income side. Sale of investment is a capital receipt. It should not come under income and expenditure account. Cash in hand to be treated as an asset. It should not come under income and expenditure account. Then payment side. These payment side item to be appear in the expenditure side of the income and expenditure account. Buy sports material purchased 10,000. Revenue expenditure, recurring nature, it should be appear on the expenditure side. Stationery paid, also revenue expenditure, it should be appear on the income and expenditure side of the income and expenditure account. Computer purchased. Computer is an asset, non-recurring nature. So it should not come under income and expenditure account. It should be transferred to balance sheet. So salaries, revenue expenditure, recurring nature, it should come under income and expenditure account, expenditure side. Then closing balance of cash in hand to be treated an asset, it should be transferred to balance sheet. So only few more item alone to be appear in the income and expenditure account. Then we are going to put the total. First we check which side is the highest amount. Credit side, that is income side is the highest amount. First we put the total on income side 64,000. The same 64,000 also appear in the debit side, that is expenditure side. The difference 27,000 to be treated as a surplus. That means excess of income over expenditure. The difference to be treated as a surplus. This is the solution for problem illustration number 6. Then illustration number 7. From the following receipts and payments account of Trichy Recreation Club, prepare income and expenditure account for the year ended 31st March 2018. See, some of the receipts are given in the problem, some of the payments also given in the problem. Receipt means capital receipt as well as revenue receipt. Payment means capital payment as well as revenue payment. But we consider only revenue receipt and revenue expenditure alone. If any capital expenditure or if any capital receipt appear in the problem, these items are to be ignored. No need to record income and expenditure. So the capital receipt and capital payments are transferred to balance sheet. So income and expenditure only revenue receipt and revenue expenditure. So first we find out the revenue receipt. Dividend received, recurring nature, revenue receipt. Sale of old newspaper, recurring nature, revenue receipt. Member subscription, recurring nature, revenue receipt. Locker rent, recurring nature, revenue receipt. Interest on investment, recurring nature, revenue receipt. See, sale of furniture 5,000, but book value 4,000. Now the difference 600 to be treated as a revenue profit. Then payment side. This capital expenditure, purchase of furniture, rent revenue expenditure, recurring nature. Secretary honorarium, recurring nature, revenue expenditure. Postage, recurring nature, revenue expenditure. General expense, recurring nature, revenue expenditure. Printing and stationery, recurring nature, revenue expenditure. Audit fees, recurring nature, revenue expenditure. Cash in hand is an asset, it should not come under income and expenditure account. Then we are going to prepare the income and expenditure account. First, see, rent, revenue expenditure 2800, secretary honorarium 15,000, postage 1700, general expense 4350, printing and stationery 45,000, audit fees 5,000. Then income, dividend received 27,600, sale of old newspaper 3,000, member subscription 31,000, locker rent 8,000, interest on investment 1,250. Now profit on sale of furniture, that is the book value, selling price 600 to be treated as a profit, revenue receipt. Then we are going to put the total, which side is the highest amount, that is debit side, that is expenditure side is the highest amount. First we put the total on expenditure side 73,850, the same 73,850 also appear in the income side. So excess of expenditure over income 2,400 as a deficit. This is the answer for this one problem. See, these two illustrations are go through. Then what are the differences between receipts and payments account, income and expenditure account? Any come clear? Differences between receipts and payments account and income and expenditure account. First, receipts and payments account. It is prepared to know the cash receipt and cash payments. Receipts and payments account are prepared to know the cash receipt and cash payments. Then income and expenditure. It is prepared whether there is an excess of income over expenditure or excess of expenditure over income, whether the income is sufficient to meet the expenditure or not. Okay, so first one, it is prepared to know the cash balance, that is to know the cash receipts and the cash payments. But income and expenditure is prepared to know the whether the income is sufficient to meet expenditure or not. Second one, receipts and payments account. It is a real account in nature. It is a real account in nature. Income and expenditure account. It is a nominal account in nature. As per real account, receipts and payments, as per real account rule, what comes in should be debit and what goes out should be credited. So actual receipts are recorded in the receipt side and actual payments are recorded in the payment side. But in income and expenditure account, all expenses are debited and all incomes and gains are credited. Receipts and payments account. It is based on cash system of accounting. It is based on cash account. It only records cash receipt and cash payments. Like non-cash items are not recorded. But in income and expenditure account, it is not based on cash system. Like income, depreciation as well as accrued income or outstanding income also appear in the income and expenditure account. See, non-cash item also recorded in the income and expenditure account. Then receipts and payments account. Receipts and payments account started with the opening balance of cash in hand and opening balance of cash at bank. It ends with the closing balance of cash in hand, closing balance of cash at bank. Then income and expenditure account. There is no opening balance, there is no closing balance, but it ends with the surplus or deficit. Then it contains capital receipt as well as revenue receipt, capital payment as well as revenue payment also recorded. In receipts and payments, capital receipt, revenue receipt, capital payments, revenue payments. All the receipt and all the payments are recorded. But in income and expenditure account, only revenue receipt and revenue payments alone, particularly these items belongs to current year. Then receipts and payments account. All cash receipts and payments during the particular year, it belongs to previous year or current year or subsequent year. But in income and expenditure account, receipts, all incomes and expenses belongs to current year alone. In receipts and payments, we record previous year receipt, current year receipt or subsequent year receipt. Previous year expenditure, current year expenditure or subsequent year expenditure. All the items are recorded. But in income and expenditure account, only current year revenue receipt and current year expenditure alone, revenue expenditure alone to be recorded. These are all some of the differences between receipts and payments account. So students, you should go through whatever I taught for the last 15 minutes. Just you go through and revise. First you identify the item, which one is appear in the income and expenditure account, which one is appear in the receipts and payments account, which one is appear in the balance sheet. See, once again I recall, all cash receipt and all cash payments, whether it is capital receipt or revenue receipt, whether it is a capital expenditure or revenue expenditure, these receipts or these expenditure belongs to current year or subsequent year or previous year. All the items to be recorded. It is started with the opening balance of cash in hand, it ends with the closing balance of cash in hand. Then income and expenditure account. This income and expenditure account records only revenue receipt as well as revenue expenditure. That is, these revenue receipt, revenue expenditure belongs to current year. Item alone to be recorded. It ends with surplus or deficit. So out of these item, some of the item will appear in the balance sheet. That is a capital receipt, capital payments are transferred to balance sheet. These are all the items to be appear in the income and expenditure account, receipts and payments account. Now students, now I request everyone to go through the format and you go through the difference between receipts and payments and income and expenditure account. Today class is over. Thank you.